Welcome back, and joining us for a look at the day's market moves is Craig Pheiffer from Sasfin Wealth. Wealth Securities. It seems that things are okay. Good. Okay. It seems that things are a little bit confusing today. Let's get straight into the numbers, because we actually, unlike all the other days that we had seen on the JSE, not a lot of company news, but today at least four. So Motors coming out with results, their interim results, their revenue up 11%, which, I mean, you're like, in this kind of environment, double-digit growth in revenue, good, but going down to the bottom line, that completely disappeared to the point where you had diluted headline earnings per share declining by 26%. Talk to me about the drivers of that performance.
Yes, I think that's a common theme with some of the numbers that we're seeing these days, is that you get revenue growth.
Yes.
Some of that driven by inflation and managing to pass through some inflation, but losing a bit of margin at the end of the day, not being able to push through all of those costs, and that feeding through, in the case of Motors, you said 11% revenue growth, but 1% operating growth, and then down to the minus 26, minus 27 bottom line earnings. So it's a tough environment out there, and I think that's a common theme again from all of the companies that are reporting, even these ones that are globally diversified. You're seeing the UK struggling, Europe struggling, Australia, New Zealand. We're all in this high interest rate environment, waiting hopefully for rates to be cut later in the year. But disposable incomes are coming more and more under pressure. You talk to the budget, no tax bracket increases there. So that just hurts that disposable income. And I think the Motors numbers showed you new car sales are probably the biggest part of their business, but growing slowly. Used car sales also growing slowly, but the biggest growing part was, in fact, spares.
Yeah, the parts.
So you rather just try and fix up your car rather than buy a new one or buy a used car.
That's actually interesting because, I mean, I looked at these numbers and I also did see the solid or resilient performance from the spares, but actually not thinking that people would actually rather fix their existing cars than actually spend money on going out to get a loan to buy a new car.
Yeah, especially at this level of interest rate.
Yes,
We're all in that boat.
Very, very interesting. Well, I mean, same theme with Super Group as well, because we did see revenue growth, but that disappearing as you go to the bottom line. What was quite interesting is that when they came out with their trading statement a few weeks ago, they were completely, that share price was hammered by the markets, but today was actually up, I think, over 2%. Is all the bad news basically baked in at this point?
Yeah, look, it has been struggling, and even looking at the Motors and the Super Groups where they were a year ago or so, 18 months, they are quite deflated and derated because of the economic environment and the path of interest rates and the time that interest rates have stayed high. So in the case of Super Group, their revenue growth was sort of 12% on the top line, and then operating profit was about 4%, and then you slump into the negative numbers at the bottom line. So very similar story, and operating really at the economic coalface, really facing the economy.
Quite interesting those results that came out of Super Group. Of course, it is one of the favored stocks where you also do have this rand hedge effect, but seeming that the macroeconomic challenges are just very, very significant. Grindrod, they came out with a year-end trading statement saying that they expect headline earnings per share from continuing operations to increase as much as 39%. We did see that share price surging 6%. And I'm wondering if this is just one of those consistent deliverers of good news.
It seems to be. And it's the share price graph shows you that.
Yeah, indeed.
If it was a yield curve, it would be it would be a normal yield curve, and there's the picture. I mean, it does slope upwards and to the right, as you'd like with all your shareholdings to do. So they seem to be doing the right things, but also in a tough environment. So this was just an update, I think, of where they're going. And good results.
But also those stocks that are benefiting from the inefficiencies that we and the own goals that we have in the country, Transnet, namely. Food producer RCL Foods also came out with a trading statement, or there's a further trading statement saying that it expects HIPS from total operations to improve as much as 45.9% than the prior comparative period. Also saw that share price climbing over 3%. Are these good numbers to chew on?
Yeah, again, also a very tough environment. This was sort of an update to their previous trading update of earlier in February, where they did say, the numbers were going to be higher, the EPS was going to be more than 100% higher. So just refining those numbers, a little bit of a higher range. But yeah, I think doing well. Also have to get past the total operations versus the continuing operations.
Yes.
I think they were highlighting the total operations, earnings and HEPS. That's what I suppose includes the Vector Logistics numbers, which they sold out. Or is discontinued operations.
All right. Well, let's get to your stock pick for today, Craig. We have run out of time. What are you picking today?
Palo Alto Networks. I think in these days of all of the phishing and the firewall attacks and the need for cybersecurity, I think the need just increases every day. Those attacks just keep coming. And Palo Alto had been doing extremely well. They came up with their results last week and told the market that look, they've got clients. A lot of them have many cybersecurity vendors. So what they're offering those clients is they'll give them their platform and help wean them off their many other suppliers. But they'll do that for free until those vendors are gone. The market didn't like that. Initially, the share was down 28%. Yeah. So it's really a short-term, I think, giving up revenue in the shorter term for longer-term gains.
Short-term pain for long-term gain.
Exactly, and I think this is probably an opportunity to pick them up.
All right, a lot of people, even on Stockwatch, have been asking about Palo Alto, so seeming that it's one that's caught the interest of a lot of investors. Thank you so much for your time and for your insights today, Craig. That was Craig Pheiffer from Sasfin Wealth.